welcome back once again. And again, I'm really glad to be here with the top leaders from the NBFC sector. And apart from what I mentioned in my welcome address, I really borrowed a couple of points from Padmaja ma'am, and specifically about the diversity and the talent and hubris point was really amazing. Moving ahead, let me go ahead with today's discussion specifically about NBFCs today and tomorrow. All the time, being a journalist, whenever I went on field, all the people spoke about, oh, they are shadow banks. NBFCs are shadow banks. But surprisingly, I have been seeing them in limelight, all the time. And, I really wonder whether they are, a shadow banks. And specifically after IL&FS and DHFL, we realized that, they are no more shadow banks. They are very important, not only as a financial institution, but, system as such in the whole ecosystem of the BFSI. So moving ahead, I will have first question to all my panelists, and Revankar sir, I will start with you. How is the current situation of NBFCs according to you? And if you could also add to it, how's the demand right now, specifically after increasing the repo rate by RBI? So the current situation of the NBFCs and the demand.
Yeah, thank you. See, current situation of NBFC in the present context of India, I think the NBFC will continue to play a very major role. You just count a number of banks in India and count the number of banks there in US. US has around 8,000 plus banks, and still the report says that around 20% of the population is underbanked or unbanked. In India, it is the other way. There are hardly few banks, and around 80% of the people are underbanked or unbanked. So the NBFC are playing a role in bridging this gap. Ultimately, the customers who get into a formal system of financing through NBFC, over the period move to bank. As they grow, as they become better businessmen, or they have better record, better track record. That is the process. So the NBFCs are playing a very important role of bringing customers of the people from the unorganized sector to organized sector. I think in this process, the lot of NBFCs have built volume, built business. Maybe there would have been some accidents that has been highlighted too much. But the kind of contribution the NBFC industry has been making has not been, I feel, recognized. Especially the way the business is done in a small ticket lending. The rigor, specialization, the local knowledge, the geographical presence that is required for this kind of a business or this kind of customer base, only NBFC can do. I don't think banks are equipped to do, in spite of the now fintech being there, technology being available, people are having Aadhaar card, people are having some kind of a track record. In spite of that, it may take few years before the formal banking system reaching to the needy or customers or people who want credit. So in that way, I feel NBFC are going to play very, very important role as long as data asymmetry remains. And currently, I feel the market demand, when you are talking about repo rate, increase in rate, when economy is growing up, people want more money. Because there is a business opportunity, there is a scope to make business and earn money. The only people probably who may postpone buying or delaying credit decision would be home buyers or maybe car buyers. Because they are this mostly salaried class, and being a salaried class, when there is inflation, their savings get to some extent restricted. And these are the people, when the interest rate goes up, they may postpone. But there also, I see two kind of people. One is whether price is going up or price has gone up. These are the two. If it's already gone up, then people don't buy. If it's going up, people still buy, in spite of interest rate being high. So this is the sensitive and sentimental issue. So I feel even among the home buyers, there will be buyers. And as far as business is concerned, India is coming out of COVID, and there's a huge uptake, and the scope is very good. I feel next 4 to 5 years, the GDP growth would be somewhere beyond 7 to 8% in spite of inflation being there. So I think the NBFC industry will have a very good opportunity to grow. That's my.
Dinanath, sir, you have sure, please. Yeah, please, the same question. Yes, same question.
Okay, so I will not add to what Umesh has said. Obviously, Umesh's knowledge is very, very, comes from absolutely from the ground, and what he says is very true, important. I would just actually go to the topic of the day, NBFC today and tomorrow. And would like to actually see what does today and tomorrow mean. Because many times I wonder what are we discussing. And sometimes I believe that do we literally are we discussing today and tomorrow? Because sometimes these discussions are so short term that now interest rates are going up, what will happen to NBFCs, then interest rates are going down. Good companies don't change like that. If there is a company which goes down because interest rates are going to go up or other way around, then those companies have no right to exist anyway. Whether they are an NBFC or a bank or anything. Business models go through cycles. And many times questions or front pages, I believe, okay, I mean, does demand really go up and down every day in the morning and discussing? It doesn't happen like that. Talking about what my thoughts are, white hair now and 15 years in NBFC, and every year at least 2 or 3 such meetings where we discuss is there a future for NBFCs. And it happens, right? Every time we come and say all those things that Umesh said, every time somebody calls the clarion call of or the swan song of NBFC, as the mood may be, and things go on. I think the truth is one philosophical that a good company, whether it's an NBFC or a bank, if you have a model which leaves a reason for the customer to leave profit on the table for you, you have a model. Otherwise, you don't have a model, whether you are an NBFC or a bank. It doesn't matter. I will just ask 2 questions. I don't necessarily need answers. Think in your mind, okay? Because it's not perhaps politically right. Over the last 3 years, how many NBFCs do you think actually came into big trouble and closed? Just count in your mind. That's not the question. You'll be able to think of 3, 4. By the way, IL&FS was not an NBFC. It is called NBFC, but it was not. It was the infrastructure promoter. Let's be clear. But okay, even counting that. Now comes the second question. How many banks came into real trouble? And of course, being banks were saved in one way or the other. But came into trouble. My bet is that the number is not too different. It is around 3 to 4, either way. Okay. Then what are we talking about? What is the future for NBFC? I will take now the second question. I will take names of industries. Housing finance, first name of recall. HDFC, at least I would be. Consumer durables, first name of recalls. CV, Shriram, Sundaram. Tractors, please say L&T, but okay, even if you say Mahindra Finance, it's okay. Even if you say Mahindra Finance, it's fine. Gold loans? Which one is a bank out of this? Right? And that's the point. So the point I'm making is very simple. Is if you are leaving, if you are giving enough reason to the customer, not only customer, to staff. You know, when I joined the NBFC, People used to ask me, I was in BNP Paribas before joining NBFC, people used to openly ask कि नौकरी गया क्या? मतलब NBFC में क्यों है? Right? Now I lose and gain people from a bank. Normal. It happens. I lose to a bank. So banks hire from us. And I get people from bank. And why banks hire from us? Because I am a leader in certain fields. In tractors, I am number 1. In microloans, I am in top 3. In two-wheelers, I am in top 5. So people are good and banks hire them. Other NBFCs hire them. So in labor market, in consumer market, I believe that these distinctions are fading. Regulatorily, this thing about regulatory arbitrage, if I ever asked in the last at least 3-4 years, give bullet points, 2, 3, 4, 5 bullet points, what is the regulatory arbitrage? I never got a real answer. But okay, now with the scale-based regulations coming up, I hope that even that will go away. Actually, when you say shadow banks, actually what people mean is shady banks, right? They don't mean shadow banks. Hopefully, with that, it will go away. And then when we talk about tomorrow, so no NBFC, at least the NBFC who are sitting here and many more, expect to take or give a quarter. We don't want. We want level playing field. Maybe not in the market, that's okay. If we can't raise cheap deposits, it's fine, we will still fight. We want level playing field in your mind space. That if you believe that NBFCs enjoy some advantage or some disadvantage, try to put it in 5 bullet points. And if you acknowledge that a company is doing well because it leaves something for the customers and not because it is the NBFC of the bank, then hopefully these discussions will not happen either today or tomorrow. So I would just say these few words. I don't want to add to what Umesh said because that's absolutely the truth what he said. Thank you.
Sure, I think thanks for reiterating that how strongly you are there in the limelight, and I think really valid points. I will come back to you specifically on the skill based in my second round of questions, but let me go back to Shilpa ma'am and take her perspective on the current situation of NBFCs.
Yeah, so I will just try to add a little bit because from a different perspective, because we are in largely in manufacturing segment. So manufacturing, I think, is a very different customer segment, and what we have seen is for many years we're in that segment largely underserved. But before I go there, I just want to again go back to the word which was mentioned earlier, like the shadow bank. Frankly, I've never liked that word. I don't know why. Because it gives a very different feeling actually when you say a shadow bank. According to me, what we have seen for last many years in industry is that there is always a space in any industry. It is not only about financial services. Any industry, there is a space where actually you have to connect to the, you should give last mile connectivity to the customers who are really underserved. And I think that was mentioned by earlier eminent speakers. There is a huge segment in the economy who is underserved, and I'll say not only underserved, they're unserved. So if I talk about rural customers, semi-rural customers where we are operating to a small extent right now, 40% of our customers are new to credit. And I'll say new to credit, they're in business for generations. They're operating business for maybe 2 or 3 generations, but still they're new to credit. They don't have any credit history as such. So we're talking about a very large segment of the economy if we really talk about rural and semi-rural kind of economy. Of course, in manufacturing segment also what we keep on saying is, little on the lighter note, we say that if you start calculating ratios, maybe none of my customers are lendable in that sense. So when we talk about everything on the larger aspect on NBFCs, I think that is at the bottom of the pyramid and giving that last mile connectivity to the entire financial sector. That is the most important important contribution from the NBFCs. We are a small NBFC. We are not in the league of the others who are representing here. But I think it is a very important aspect where when you go to that niche segments of the economy, we also fund very small NBFCs and very small MFIs. And what we see them doing is just fantastic, because the business models are very unique, very innovative, and the innovation which these smaller players they've been bringing to the table, I think that they are really noteworthy. So if we talk about again the current market scenario, I think still the sentiment is very positive in manufacturing segment also, in spite of all the challenges at the global level. Most of the, because we are coming out of the COVID, and the investment sentiment as such is still quite positive. So we are at least seeing very, very positive and thriving manufacturing industry right now. That's all from my side.
Sure. I think let's hope for the same positivity for the investments going ahead as well. Rakesh ji, I would like you to add your opening remarks on the.
So I think the way Dinanath mentioned, when you build businesses, you build it for long term. You don't build it for short term, 3 years, 4 years. And every 3-4 years, you will have an interest rate cycle, whether it will go up or come down. So if you see from 11 to 14, the repo rate was upwards of 7-8%. And then it started coming down. And during COVID, to give support to the MSMEs and the borrowers and the consumers, it was brought down. Now it's coming up. So interest rate doesn't play that much important role in the consumer. Yes, some sentiment, yes, because you read it in the newspaper and the rates are going up or coming down. That definitely plays a role. But if you see, the economy is expected to grow at 7.5-8%. And that really will drive the consumption and drive. If economy has to grow at 7.5-8%, and India is going to be the largest, fastest growing large economy in the world, I think you need a lot of credit in the market in terms of whether it's the MSMEs, the SMEs, or the corporates, and that will drive the sentiment and the behavior of the consumers. So clearly, we are in a good space for the next 5 to 10 years, the way Indian economy is. And also we have to see that in the last 4-5 years, I think Indian economy is changing structurally. Lot of formalization of businesses which is happening. Post GST and all, if you see. And earlier, we as lenders, we didn't had access to data in terms of how do you lend to someone who doesn't have, let's say, established cash flows. Now with the GST coming in and all, one can underwrite and give loans on the basis of the data which is available today. So clearly, I think there's so much which is changing within the economy which will, and also I think, see, a lot of information is not available to NBFC, and I'm just coming, we provide all data to CRILIC, but we don't have access to the CRILIC data. But if you look at what's happening at a country level, ONDC, which Open Network Digital Commerce Platform, which is being created, I think there will be a democratization of the data. People will have access to the data, and then it depends on you how you really use that data to underwrite a customer. So clearly, it's not about an NBFC or a bank. If you have the right capabilities, you have the right analytics, you have the right scoring model, you have the right risk management capabilities, you will be able to use that data and create. So in the end, about NBFCs today, tomorrow, I'm a career banker, I started with a bank, but I don't see a difference in terms of you should have the right corporate and the compliance structure and the compliance culture. If you have the right risk management processes, and in a lending business, your credit quality will give you right to grow and right to operate. And if you continue to build the right set of infrastructure, processes to underwrite and provide the last mile connectivity to the MSMEs, which is in India, it's been just formalization of income is growing. So the way I see it is the existing banks will not be able to provide the last mile connectivity and the credit which is required in the economy. So clearly you need many more players. It's not only banks, it's not only NBFCs, but small finance bank, payments bank. You need many more platforms and institutions to really reach out and support the growth of this country and the credit which is required in the economy.
Sure. Noted your points. In fact, really realistic and meaningful thoughts from all the speakers here, and it's great to see the confidence level of confidence specifically which they have. Umesh sir, I will come to you now. So at one side, we have a great confidence, strong business models, sustainable business models, which obviously is in your hand and you're trying to build it. But what about the regulatory environment? Do you see the same kinds of support specifically from the RBI to the NBFCs that RBI offers to the banks? Or do you expect more for you to grow and achieve the next levels?
See, I don't want to compare the bank and NBFC, even though regulator for both is common. The kind of the support RBI has been giving to banks and kind of regulation they're under and maybe NBFC are a little different because of various reasons. I don't, it is historical, I don't want to comment on that. But I feel the current regulatory environment has been quite positive for the NBFC, even though the some of the recent development where they are trying to bring down the regulatory gap or the leverage or advantage what NBFC had to the NBFC, especially larger NBFC. Since we are over the period, we have gone to that and we have to start getting adjusted to the changes. I think larger NBFCs are well prepared on that. I don't see any challenge on the same. Maybe if a few things which banks have additional support on the liquidity front, on the refinancing front, maybe NBFCs do not have. And NBFCs have to depend on the banking system or the other open environment to get the funding. That's the only reason, the only difference. Otherwise, I feel the NBFCs have been playing very important role in addressing the need, a credit need of certain segments which banks have not been funding. And therefore, the NBFCs present, you take just example one of gold loan. Now, gold loan has been provided by the bank traditionally for so many years. Pawn brokers for so many years. When there are two different institutions which are being there, how NBFC played a role there? NBFC had no role. If at all, every street corner there's a pawn broker. And banks have been funding. In spite of that, NBFCs have come and made a big difference. Today, banks are copying NBFC model in gold loan. That means the NBFCs are a kind of a disruptive model which helps the banks to come off and start playing a role to the needy. So I think everywhere, you take a housing loan. Banks were not giving housing loan till HDFC came into the picture. Banks were reluctant to give housing loan. Just imagine 30 years back, anyone approaching banks for housing loan. That product was not there. Maybe they should have given 300% of the security to take a housing loan. But HDFC came and changed the picture. So I feel the RBI has to recognize this fact that NBFCs are disrupting and creating and making the banks to get onto the street and do the business the way the society needs. So I think maybe our expectation from RBI will be much higher as far as especially on the refinancing part of it. But I feel somewhere there RBI has to understand that NBFCs are playing a very important role. As a support, they need to give a emergency liquidity support to the NBFC. Then I think NBFC can play much bigger role in further disruption in various other markets, especially on MSME lending. Because SME lending, as Shilpa rightly put it, there's a lot of scope and opportunity. And as Rakesh said, since data is available now, NBFC can play a much bigger role than what they have been playing. So I think that's where maybe our expectation from RBI would continue to remain as a supporting or as a regulator trying to be a last what to call a supporting system as a last resort.
Again, very open and important thoughts, Umesh sir. I think one major development that has happened with the NBFCs is like he mentioned about the data. I think NBFCs and fintechs have been developing alternate models to lend, and they have developed alternate mechanism, developed their own credit scores, and catering to a new segment which is MSME, SME, and the millennials, which I spoke about some time back. I think that's really interesting side there, and hope this blossoms going ahead. So, Dinanath sir, let me come back to you, and we spoke some time back about the regulations. So, can you add your observations specifically on the scale-based regulations which RBI has been talking about and it came? How will it impact good, bad, pros, cons on that aspect?
Sure, thank you. So, first of all, let me say one thing. We are lucky to have a regulator which listens, open to listen whenever circular, either before the circular or after the circular, there is always scope to appeal, and they listen. And that is what we all found out. I think we all agree on that. Scale-based regulation especially has a background. The background was that there are, the number keeps changing, but let's say give and take 10,000 NBFCs and of various size. And naturally, the requirements or what the NBFCs can contribute or the requirements of these NBFCs are very different for the top 10, 15, then the next 100, then the next 1,000. After that, they are very different. And all these years, the problem that we faced with the regulator or with anyone else, that how do we form regulations which are uniform for everybody? And one size just didn't fit all. And all the time that was industry's complaint, all the time that was RBI's comeback saying, but this is good for you, but bad for them. And that's how it used to start. Even on industry forum. On industry forum, when we have a company with 1 lakh crore balance sheet and a 10 crore balance sheet, the issues will be so different that nothing can be come out of it. So the scale-based regulation has that background and has the potential of meet even the systemic risk. The systemic risk is much higher from the larger NBFCs, and hence they need to be regulated differently. So very clearly a very welcome move. The way RBI is doing it is also, they declared the intent first and then one by one coming up with circulars, giving time to NBFCs to get ready with that. The good thing to see is most NBFCs are actually ready even before the circular comes. Whether it is LCR or whether it is a CRO circular or a CCO circular, most NBFCs actually comply with it, and by 1st October, all the UL, so we all know who are going to be the UL, the upper layer ones, and are going to be ready. So I believe nobody should look at it as a problem, more stringent regulator coming up, regulations coming up. It is actually an opportunity. It is actually an opportunity to see, okay, you are in an upper layer, and I will talk about the lower layers also. And RBI is monitoring you, regulating you, inspecting you the way they inspect banks. And hence there should not be any doubt in anybody's mind that you are getting a easier field of play. And these companies are upper layer because surely their business models are not dependent on a particular regulation to have a business model. I mean, you should not have a business, nobody should have a business model based on regulations or a particular tax advantage, because that is bound to go one day. So, and then suddenly you don't have a model. So, business model should always depend on market advantages and not. Then when it comes to the middle level, lower level, at the same time RBI has had good guidelines, regulations about co-lending. So if you actually see the way regulations have developed, there is a clear method. So there is the upper layer and then there are middle layer and others. Along with that, co-lending and other models are being perfected. So I see this scale-based regulation as a big opportunity for people with capital, with access to capital markets for both equity and debt, growing their balance sheets, and people not having that access, growing their business and not balance sheets, growing their business, using their strengths, which are business strengths, to do more business, to bring more unbanked customers in the banked category, organized lending category, because that scope is tremendous. The organized lending penetration in the country is very low. It can only increase if there are more players, and players playing according to the strength, whose strength is access to market and balance sheet, using that as their strengths, whose strength is particular business model, niche access, using that, and then with the overarching advantage of democratization of data. And that's where there will be two very specific asks from the regulator. One, democratized data. I think the big example we all talk about is Relic. I just don't think it is fair that we contribute to something and we don't have access. And everybody acknowledges it is fair, but nobody does anything about it. So that is very clearly one demand. And second, work out a way to have a lender of last resort for NBFCs of certain category. Not that we will need it, like most banks don't need it, but it is there. So these will be the two very specific asks. But otherwise, you think, I believe that regulations are moving clearly in the right direction.
Noted your point, sir. Shilpa ma'am, you're catering to a completely different segment than Aditya, Birla or Shriram or L&T Finance, and I'm sure you must be dealing with a lot of SMEs, MSMEs, and entrepreneurs in manufacturing sector. During the pandemic, government came with large schemes like ECL, GS, and tried to help the SMEs through banks and NBFCs also to that segment. So, what kind of changes are you seeing now in the SME sector, and do you think that there is a regulatory push required to encourage this particular segment through NBFCs going ahead?
No, the schemes which were provided, and I think that was, at that time, that was need of the hour, and definitely that helped the real MSME customers, where when we see real small customers across all segments. And largely, the sentiment which we have heard from the customers is that they appreciated it and they thought that it was timely, it was required, and that support actually helped them in terms of their survival also, in terms of finding new avenues for growth also, because many of the customers at that time, they were also struggling because of the change in patterns in demand. So, but that support which was timely, that helped them. What we have seen is wherever those supports were provided, customers have used that very judiciously. We have hardly seen any issues, any problems where this kind of support was provided. Largely now, after it is almost more than 2 years now in the pandemic, so the need for that kind of support is it is not felt now. As I mentioned earlier, the sentiment around investments in manufacturing segment is quite positive. What we need is actually wherever there were earlier some incentives like subsidies and all for investments in capital goods, and that is not available right now. So if those kind of incentives are again reintroduced, that will help substantially to the MSME segment, because for MSME customers who are struggling with so many things, means right from their customers to right from managing their workers, and typically they are very small outfits. For them, investing in capital goods when they want to increase the capacity, it it is a substantial challenge. So at that time, if certain support is available to the customers, that will go a long way. And those subsidies were available earlier. Right now, those subsidies, credit linked capital goods subsidy is not available. So if it is reintroduced, I think that will help. Another biggest challenge what we have seen, at least in manufacturing MSMEs, is working capital. And basically because banks are the ones who generally support for working capital, and banks will always look for at least some collateral security when they want to give cash credit limits and other working capital support. And many of the customers, they struggle there because they don't have that kind of, because many of our customers, at least they are first generation entrepreneurs, they don't have that kind of collateral to offer to the banks. So their growth gets limited. So if something can be done for working capital support for the MSME customers, I think that will be immense help. And I think we are just waiting to unlock that real potential of the MSME segment. We all know the problems of China and other countries, and our manufacturing segment is definitely poised for a very, very substantial growth. And if that has to happen, this working capital challenge of MSMEs needs to be addressed. That's all from my side. Thank you.
Sure, I think valid points. Considering MSMEs, we call them a pillar of the country, so need more push on that side. Rakesh ji, let me come back to you. Dinanath sir and Umesh sir spoke specifically about the regulations. Let me ask you something about the collaborations or the partnerships with the NBFCs and the banks have. So going ahead, henceforth, if the NBFCs need a liquidity at a ease level, or maybe far more seamless relations between the banks and the NBFCs so that they can achieve the next level, what kind of changes do you see or do you expect in terms of regulatory environment so that it will offer some seamlessness between banks and NBFCs? Point number one. Point number two, as the economy is getting formalized, GST data is available, and all we spoke about acrylic, what kind of opportunities do you see that NBFCs can cater to that market far more seamlessly? So specifically in ease of liquidity, ease of access to liquidity, what do you expect?
So just first on the regulatory, I think the question which you asked Umesh and Dinanath, I believe and I'm a firm believer that there should be a strong regulatory environment because we all need to be a very responsible lender. And that's the reason I think a strong regulatory environment is needed. Otherwise, every 4 or 5 years, there will be a question, NBFC is, this segment is getting, or sector is getting challenged because of the liquidity and all. So clearly strong regulation is needed because a lot of NBFCs are quite large and they are as large as a mid-sized banks which is there in the industry. So clearly regulation is needed because also we give 10, 15 years of loans. In housing you give 20-year loans. So your regulation has to be strong, your compliance has to be strong to sustain over a period of time and not be a fly-by-night operator. So I think clearly strong regulation is recommended and I believe in the same. In terms of what one can do with NBFC, banks, and I think today is the age of partnership. I think we don't have to create everything ourselves. So it's not only between NBFC and banks in terms of co-lending, but with fintech, and there are so many startup in different ecosystem. If you look at in education, in healthcare, there's so many players, new startup companies which has come in. Together working in terms of providing the financing solutions across sector, I think that can be done in terms through the partnerships. We don't have to create everything ourselves. Co-lending is a very good example in terms of a lot of segments which as an NBFC, because our cost of funds is not to, when it's compared to a bank, it will be slightly higher. So I can't operate in that segment, but we have access to these customers. So how do we do a co-lending with the large banks and we can provide that solution, a working capital, or for that matter, any other loan to our customers. So clearly, co-lending and partnership is important. I think the most important is the liquidity. I think from a funding point of view, because a question mark every time the market there is anything which external happens, The first question mark is on the liquidity and how post IL&FS crisis, what happened. I think from a regulator point of view, that's one thing which needs to be addressed as a last resort of funders, lender to NBFC, or creating a fund like you have for the NHB has from a refinancing point of view. Something needs to be done for the NBFCs as well. So that's one area. Yes, see, the large ones, large NBFCs will have the access to the market. And during IL&FS and the NBFC crisis also, we had access to funds and we had liquidity available. But the mid-size, the small size NBFCs, where the struggle is much more on the liquidity side. And I think that's where structurally something needs to be done, that you have the refinancing ability, which can be provided to these institutions.
Thank you for that, again, insightful thoughts, Rakesh sir. I think the watch is ticking. I have some 5-6 minutes left, but let me take one common question to all of you now. And again, that will be specifically towards the future, though we discussed the current situation and future partly. And this question is to common to all of you, considering the segments that you operate in. And Umesh sir, I will start with you. Considering the government has been trying to spend a lot in the economy, trying to push the infrastructure, but on the other side, inflation is a major worry. The war is happening there, and RBI has been actually, talking about it, and it sees that GDP may come down, inflation will go up in a couple of months. So by any chance, are you going to change your strategy for a short term or a long term going ahead for at least maybe a year or two in transport sector, or in wholesale or retail, or in manufacturing, or again in wholesale or retail segment? Umesh sir, I will start with you.
I feel as far as transportation is concerned, India is going for big upcycle. Not only because the vehicle sales, if you look at 2018-19, 1 million vehicles were sold in India, and it came down over the period to 500,000 in the previous year, and last year it was 700,000. That means we are yet to reach the peak sales that happened 4 years back. So I can imagine a situation where it will cross the peak sale that happened in 18 and go above that. Because if you go back to every cycle in the past, every time it reaches a peak, go down, then crosses that peak. So I think at least another 3-4 years, there should be upcycle on vehicle demand. Now, whether India will progress towards that because economy being challenged because of the geopolitical tension, I don't really think so, because the government spent on infrastructure is not likely to come down, because government has been committing again and again that they're going to spend X amount on the infrastructure. 111 lakh crore is something they have committed. It may get delayed, but that commitment towards logistics will definitely happen. India should see itself as a future transportation hub. Or if you just look at Singapore and Dubai, such a tiny countries, they created a huge economy only because they were the transshipment points. Singapore is transshipment point between China and the rest of the world, and Dubai is transshipment point between Europe and the rest of the world, especially Asia. So India is strategically located and has a huge scope and opportunity. And it is yet to play a role in the world logistics and within the India logistic movement, mainly because the logistics cost in India has been very high. They say it's around 14%. India's cost for any product manufactured and logistics as a part of that product is around 14%, whereas internationally it is around 78%. That means there is a huge problem to be addressed, and wherever there is a problem, money flows in, because you make money only when there is a problem or where there is a scope to earn money. So I feel the investment will come in the logistics, and to that extent there is a huge scope and opportunity for logistic operation in India. And also the infrastructure that we provide to the manufacturing in India will be very, very important for Indian goods to become cheaper or Indian goods to be available across the globe. So the connectivity between ports and various parts of the country or hinterland to the main coastal line, all are very, very important, and government has definitely committed itself, and that commitment, if they are able to implement, I think there is going to be a huge opportunity. So I feel there will be huge upcycle, and we are not going to slow down our, maybe there could be temporary 1 quarter or 2 quarter postponement, but otherwise we are going with a clear double-digit, high double-digit growth for our business.
Yeah, just taking the same question. See, it is our conviction clearly that the retail credit growth in this country is going to explode. Now, whether it explodes, this quarter or it is postponed because of interest, it doesn't matter. Very clearly, 2 sectors, that is income generation, and I don't take narrow sectors, income generation and responsible consumption. I'm not even counting BNPL into real lending. I mean, that may be something which is a fashion. I suspend judgment on that. I have not studied it enough. But responsible consumption, medical spending, for example. And we are an extremely underinsured country, and people need money for medical. People need money for education. Income generation, whether it is SME or a farmer or or a small entrepreneur in rural, demand for organized lending there is just going to expand. What is going to help it is use and democratization of data, and to add to that, digital reach. Digital reach is very important, but much more important than the data. I know I'm running out of time, but just give one small example. In tractor lending, just 5 years back, we used to say, okay, monsoon, ठीक लगता है, अच्छा लगता है, बुरा लगता है, and decide our tractor budgets, right? Today, there is we are capable of actually pin code wise studying sowing patterns, prices in mandis, how rain is progressing, and actually how portfolios, not only ours, market portfolios are behaving in that area with a particular dealer, and design schemes, design budgets, design manpower allocation, dealer wise and quarter wise change it. So these kind of micromanagement is possible. That's where growth happens. That's where credit parameters change. Right? A 50% on-time payment in farm, in tractors, was considered par for the course just 5 years back. Today, we are talking whether it will be 92% or 93% or 94%. How has it happened? Has the Indian farmer become richer? No. It is that the companies have better algorithms to see whom to call, who will clear the credit, the monthly payment or 6 monthly payment, whom to follow up, how much, how to allocate resources. So that kind of absolute detailed precision bombing. The course of World War II changed when the American Air Force changed from nighttime carpet bombing to daytime precision bombing. I think that is happening in retail lending in the country, and data is the king. And it's no longer the data you own. There is no data ownership. It's available to the next bidder. I once tried to buy some data from somebody. After some time, I realized it was my own data, which I bought. So this happens, and it cannot be, it cannot change. Important thing is what you do with the data. And that's where the joy is going to come from, and the growth is going to come from.
So taking clue from what he spoke earlier, I think the biggest change in terms of short-term strategy is, for a mid-sized company like us, is the technology, because the data explosion which has happened, if you have to take advantage of that, you have to be ready in terms of your own technology. And technology is no more an enabler. It is not which is going to support you. Technology actually becomes the center of anything you do. And I'm not talking about only financial services. I'm seeing that happening across segments. Let it be manufacturing, let it be services, let it be any other industry we are talking about. So I think that is the biggest change which has happened, and that was actually pushed to a great level because of the pandemic situation which we all saw and faced. And because the technology is going to be the center place now, and the data which is available, and if you're going to use that data more and more effectively and efficiently to build different business models, I think another thing which is going to be the way forward for anyone, let it be a small sized NBFC or a maybe large player also, is how do you build alliances with so many players? Because as I mentioned earlier, the innovation which is happening in the industry, I'm not talking about fintechs here, not only about fintechs, it is about traditional NBFCs, hybrid models, or pure fintechs. The innovation which is happening right now is the future is going to be alliances and maybe coordinating and working with each other in a more effective manner. And it is not only about co-lending. It is about bringing in the efficiencies overall in the system through various business models, which can be actually taking the industry as such, the financial services industry, to the next level. So I think going forward, the boundaries between a traditional lender, a fintech, or maybe any other player in the financial services, those boundaries are going to fade, and you will see various new models evolving, and that is the most interesting and exciting thing which is happening right now. Means the short-term strategy as well as the long-term strategy has to be, how do you leverage the technology, how do you leverage on these alliances and go to newer and innovative business models.
So just to answer your question, yes, we are looking at a strong and healthy growth. Yes, there will be certain sectors which will get impacted because of the inflation and all. So we will take a calibrated call in terms of which sector we have to go slow on. But if you look at the overall economy and the macro data which is coming through, whether it's a GST collection or whether it's the PMI or whether it's exports, I think it's all at its highest ever. So the overall economy looks to be in a good shape and good position, and India is in a much better position compared to the world in terms of the economy. So we are looking at a pretty strong and a healthy growth in the next 3 to 5 years for sure.
Thank you. So on that note, when economy is looking good and NBFCs are also planning better for the better future using data and partnering and alliances, I think majority of them also spoke about the co-lending, and I'm feeling really excited because we have crafted a specific panel on the co-lending during a day. So do attend that also. So I think meaningful thoughts from all the panelists and really great insights. I hope you enjoyed this session. Unfortunately, I don't have enough time, else I would have taken some questions, but feel free to send your questions and we'll try and take their views later on. So thank you Rakesh ji, thank you Shilpa ji, thank you Dinanath ji, and thank you Umesh ji for sharing the thoughts here. Thank you so much for listening to us very patiently.